Hello everyone, welcome to the Ichimoku daily analysis for the S&P 500 for Wednesday, March the 23rd, 2011. Well, a bullish day today, and we had a green body candle, so that tells us that the buyers have made net bullish progress on the day between the open and the close. We haven't had a change of trend today. Previous day we had an inside day in bar chart terms, today an outside day in bar chart terms, so that creates indecision for this trend to the upside. Having said that, however, the bulls did close this market in control, and the bears actually lost commitment as the market was trading down to lower levels. We can see the shadow on the bottom of the candle highlights the loss of commitment from the bears, and the bulls coming in and buying the market back up to close the market up towards the high, and as I've said, close the market in control. Now, for the bulls, however, they weren't strong enough to take out the 1300 area of resistance, and as we've said consistently, that is a really big number for this market. It's a round number, and they always are big areas for support or resistance, and in this case, it's acting as a solid barrier for this market. Now, in candlestick terms, we also have another type of reversal pattern, a bearish reversal pattern, and that's a tweezer's top. And that's where we have the high of these two candles roughly around the same area, and that's 1300. So the fact that that area is 1300, that resistance that we know of, adds more weight to this tweezer's top pattern to be a potential reversal pattern. Now, with the tweezer's top, you can have a couple of candles in between as well, so they don't need to be consecutive candles. So that's what has set this market up for that potential. However, with the short-term dynamics, with the market closing up towards the high and the loss of commitment from the sellers, is not necessarily supporting a change of trend to the downside. So that makes the low of this current candle very, very important. That low is around 1284, so we will need to watch that low for a potential lower high and lower low. Now, the other thing that's complicating any potential trend to the downside is the fact that we've got a lot of support down below because we're trading within the cloud, and we can see potential support anywhere down to around 1265 for this market. So anywhere within this cloud down to this area will potentially act as support. Also, we have the Tenkan-sen trading down at 1278, which could act as support for the market as well. To the upside, we have the resistance offered at the Kijun-sen and obviously 1300, and then above there 1305 at the top of the cloud, and then 1313 if the market does break out to the upside. Now, with the market trading within the cloud, we do have a neutral market in big picture terms, and a market that's quite neutral in the medium-term time frame, because we're trading pretty much at the Kijun-sen. We are trading up above the Tenkan-sen, and that tells us that the market is bullish in the fast-term time frame. But if we look at the angle of that Tenkan-sen, it's pointing down, so that doesn't really gives much indication of any decent momentum to the upside. It's actually suggesting downside momentum, so we do need to be careful of that. So for the next trading day, watch the low of the current candle for a potential test to lower levels because of the two consecutive Japanese candlestick bearish reversal patterns that we've had. Previous day was a bearish harami, today a bearish tweezer's top, and quite often tweezer's tops can be powerful reversal patterns. So watch the potential for the reversal, but also watch the resistance overhead at around 1300 extending up above there.